Welcome back. You're watching Closing Trades on ET Now, and you have the markets that are still languishing in trade today, 0.5% down to coming in for the benchmark indices. We have Sunil Subramaniam who's joining us on the show right now to talk about the markets and more. A very good afternoon to you, Sunil, and we are almost towards the end of the year 2024. A lot of new themes have emerged, at least towards the fag end of this year. You have CDMO, which is finding new favor in the market. You also have the solar, the renewable energy theme also as one of the bright spots. What do you think in the year 2025? Do you think these new themes that have just found favor will continue with the same fervor?
To some extent, I think digital and those spaces are also something which India's artificial intelligence is playing a role there. So I think IT will have some element of new elements there. But if you look at the fact on 2025 is going to be dominated by Trumponomics, right? So what Mr. Trump is going to do, and there I see a big opportunity for in the PLI space for us to be partnering with China, because if China is going to be slapped with heavy tariffs and India not so much, right? 60% is 10%. So I expect that with the thawing of relationship on the political side, we could see kind of partnerships between China and India at a ground level, so that products are then sent to America made in India, but with Chinese participation in the value chain. So I think that's a new twist to the China plus one. So China plus one, you may call it. I think that will be probably a good story which will start playing out. I think it will play out in electronics, it will play out in pharmaceuticals, it will play out in some extent in textiles because of the Bangladesh issue. So I think you're going to see definitely some new twinges to the existing things like PLI coming up in the next year. The budget is also going to be a trigger to set direction. But on the solar part, probably on the looking at the oil scenario, right, with the China economy being weak and Europe being weak, though US is showing recovery, oil, if it's going to be trending down, then maybe alternative energies doesn't get that much of a push, right? Because if you get cheaper oil, then everybody tends to put alternatives slightly in the back foot. It's definitely a good long-term play, no undoubtedly about it. But in the short term, it's the oil which will decide whether the alternatives, the solar and everything else, gets a pickup.
Yeah, it comes down to oil yet again. But since we're talking about the digital themes and the new themes which we have seen coming up this year, of course, quick commerce was one of them. But clearly getting very heated with that as well, Sunil, and I'm not just talking about this dark store edition, but the fact that even now food delivery, there are new entrants coming in, whether it's Magic Pin, whether it's Ola Dash and all of that, and this would again mean profitability will be kicked down the road.
Yes, but in the new age, profitability is not so much as market share and expanding the market and gaining, like they used to say, eyeballs, right? Getting footfalls onto that, right? Digital footfalls, if I say. So I think that it's going to be a bloodbath in terms of the economic activity there, but the stock market will still try and bet on the winner, because it's going to be kind of winner takes all, and the losers will either get merged or acquired by one of these biggies. So while it's going to be interesting, it's definitely the way of the future, because the Indian demographic changing towards the younger demographic means buying patterns are changing, and these are the companies which are taking advantage of that. So overall, as a space, I think it's going to be a great space. Who's going to be the winner is the million-dollar question. So if you're taking exposure to that space, best to diversify within 2-3 companies within that space, right? So I think that's the best. But definitely they are the game of the future, and you can't afford to ignore them. And profitability is not the main criteria on which the share price moves in these kind of new age entities, if I may say.
Nilesh, let me come to you, and there's one stock that I want to ask you about is Paytm. How are the charts for this one looking like right now? Because if I had to ask this question to you, I think 3 months ago, I'm sure you would have still been unsure about which direction is this stock headed to. But now it has surpassed 1,000 rupees per share mark. Do you think that there is more scope for an upside for this one?
So technically, it's been a slow and steady up move all through after bottoming out. And it was not a move wherein we saw 10% move ticks and then continues on. Every move, we saw it being faded by some margin. So if you look at the move right away, all the periods. So even now we've had a 3-4 day up move. We could get a fade off, and 1,000 was the last price point back in 2023, which was a resistance. And the next one comes to at 1250, 1300, because that is where the price stabilized post IPO roughly for a couple of sessions. So for now, the trend is positive. A trailing stop loss now comes to around 970 odd levels.
Okay, so that's the take coming in as far as Paytm is concerned, and the trailing loss that one should watch out for on that one. Just taking stock of what's happening in the market, Craftsman Automation has managed to see a bit of an up move. Bharti Hexacom is doing quite well. Policy Bazaar is in the green right now. In fact, a couple of these insurance companies.
Conclude, it's a whatever. All the three are coming together like a Triveni Sangam, and so I think that these are growth businesses in which we must remain invested for the medium term.
All right, so that's the view coming in from Sunil when you talk about these market-related counters. But before we move further, Kunal, let me quickly get your BTST ideas.
So, one sell call and one buy call. The sell is on Tata Motors. So, this stock remains to be one of the heavyweight auto names which is still under weakness, showing signs of weakness. So, would be looking out for targets in the range of 740 for the next couple of days, and stop loss could be kept at 772. Wipro is the other stock which looks very attractive. The stock is confirming a breakout as well as a close above 312 mark. So targets of 325, stop loss could be kept at 305.
And Naresh, what about you? What are your BTST ideas?
So first would be a buy on Reliance Industries holding on well, stop loss at 1240, target price of 1290. Second would be a sell on Tata Steel. The momentum continues to be down, stop loss at 146, target price of 138.
So there was Tata, which Tata stock did you pick?
Motors.
Tata Motors, and he also picked one of the Tata stocks. So let me actually talk about Tata Chemicals, because we did speak with the management earlier in the day. They did talk about how the problems with respect to soda ash pricing is expected to continue. It's not a problem that will go away in a hurry, but they do maintain that perhaps the pricing as well as margin is something that will keep improving as we head into the next year. They're working a lot in terms of bringing the cost efficiencies. They also talked about how government is trying to support the domestic industry at this point of time, but clearly that's one stock that we're watching out for. But talking about domestic protection, Sunil, steel as an industry is one which has been looking out for that protection from the government for a long time, even though when you have the users, whether it's the car companies, etc., which are against that protection. What do you think is likely to be the case for metal stocks come 2025?
Yeah, I think metals, China is the place to watch out for, because prices of metal products in India are still linked to the London Metal Exchange. And that's where China plays a big part. I don't see yet a big Chinese recovery. If the tariffs and all of that are going to be heavy, it's going to get much delayed. And like I said, China needs to diversify it outside. So I would say I'm a bit bearish on the metals pack in the current context, right? I will only turn around when I see a strong US manufacturing recovery happening, which in turn could fuel metals related to whether it's copper, aluminum, steel, ferrous, non-ferrous, both. So for me, that trigger is there. It's a weak Chinese economy means that I believe that metals are in for a slightly bearish trend. So in that context, the question that you asked me about tariffs and all of those, well, it all depends, right? If the metal prices are dropping and they're trying to dump on India, then naturally India will have to counter that. But bear in mind that Trump is also going to look actively at what kind of tariffs you're putting on those stuff. So it's going to be a complex thing, whether the government responds to that. Because the government capex also slowed down, and that also hurt the steel companies in terms of demand. But in the second half, with government capex, I expect it to pick up. Then I think the demand for steel from the government capex spin-off will start. Private sector capex is yet to start in a big way. But when that does start, steel demand will pick up. So I think it's a temporary issue for the domestic steel and metals industry, but we have to wait for these triggers at government capex and this. And if international prices keep trending down, the user industries will be happy about it, but not the steel manufacturers.
Sorry to interject, but just wanted to take a look at a couple of these charts which are perking up. Naresh, what's the view on Craftsman Automation? A sudden sharp spike in an otherwise sort of a weak market. That stock is up 7% right now, and Techno Electric is the other one, and both of them have decent amount of volumes at play in the last few minutes. Anything on the charts that you are picking up?
So not really, because both are generally pretty illiquid, although they have pretty high institutional ownership. Techno Electric is relatively a better chart, wherein the stock has been consolidating in a sideways zone of 1400 to 1800, but no view on the Craftsman name as such.
Craftsman Automation chart yet again, because it was showing a rise. Oh yeah, it's now showing a rise of 14%. I think we picked up the wrong chart earlier. The other one, of course, which is doing quite well is Bharti Hexacom. That one is up 6%. Godrej Industries, IGL, Action Construction, Aurobindo Pharma, a whole host of names doing well in the trading session. And ditto is the case with Supreme Industries as well. In fact, Supreme Industries is something that we discussed with Chakri Lokpriya earlier, and he talked about how that company is also poised for good growth going forward. I'm not sure if we do have that soundbite that we can play. Okay, we'll try and kind of get that as well. But in the meantime, overall the market setup has improved marginally. We are above the mark of 24,200. Okay, so Supreme Industries is something that Chakri Lokpriya was talking about. Let's hear out his view.
The company is actually very well diversified across the various PVC, polyurethane, all those kinds of markets, and it has a fairly strong market share across various segments. One of the company's strengths is it's is able to manage its inventory quite well because of the PVC and the various fluctuation in the raw prices, which are all oil linked. And the last 1 year has been very, very volatile, as we know, for the oil industry and its derivative products. And therefore, all these companies have suffered huge amounts of inventory hits and margin hits as a result, because they're unable to price their product well. So as this whole world of oil stabilizes and the downstream kind of stabilizes, I think Supreme Industries is a market leader, very well placed to do well.
Sunil, I wanted to ask you about the hospitality sector. December, or rather, the Q3 turns out to be much better for most of these companies, given the fact that you have a lot of weddings that is happening you have exhibitions, you have conferences. Apart from that, you also have now a lot of global bands coming to perform in various parts of the country. So that also will add to the gains coming in for the hospitality sector. But where do you see this one headed now, given the fact that year after year the base is just getting higher?
Well, before I answer that question, why did you forget Diljit? Why you don't need to talk about global brands? Yeah, Diljit.
Diljit Dosanjh also. You got the tickets. Oh, they are playing tomorrow. He's going to perform tomorrow in Mumbai.
But isn't he a global citizen in that case? Sunil, he is a bit of a global citizen, right? Not just the Indian one.
You can call him that, but I would still say he's the Indian brand. Made in India.
Let's agree on that.
Yes.
Okay. No, I think I'm very bullish on the hospitality, and the reason for that is 2-3 things. One is, as I said, per capita income, the lifestyle changes. People are traveling a lot more. Even, you have this concepts of people going off to a hotel for the weekend. Just in the same city, but they just take for the weekend and go to a 5-star hotel and spend time there. So the attitude, the youth of India with the rising per capita income, their lifestyle habits are changing, and hospitality is a big part of it. And you look at it, even medical tourism, Ayurvedic retreats, right? So many of the people are going into these retreats to chill out and de-stress, so kind of a thing. So I think this is a huge growing space here. And I think it's a cyclical space, because in hospitality, you got to invest in the real estate, the property, the people, and all of those costs. But once they do that, it's a question of capacity utilization going up, and it's straight to the bottom line. So I would say that if you look at it, those who have expanded capacity in the hospitality sector, right, their current profitability could look depressed. But as the capacity utilization starts getting used up, because they just invested in capex, I see a huge V-shaped curve happening in their EPS growth. So I think picking good quality hospitality plays is a very good medium-term bet that we can make.
Right, Kunal, any names that you can give from the hospitality space that will look good even going ahead?
So I think other than Indian hotels, Lemon Tree is something which is coming back into a breakout mode. So I think it's the 4th or the 5th consecutive week where you've seen the stock coming back into a very strong recovery. I remember tracking this closer to 120, 110, 120 range. From there, the stock has moved to that 150 plus mark, very close. I think also already confirmed a breakout of its life highs of 150 plus levels. So that's another name to look out for. And my sense is that this sector would be one of the few, sectors which over the maybe next couple of years would keep on giving you those compounding kind of returns on a consistent basis. So whether you want to go back to the leaders like Indian hotels and try and take advantage whenever the stock gets back into a 5-10% correction, those are classical re-entry points or accumulation points for the stock, or whether you look out for fresh names like Lemon Tree, Chalet Hotels, etc., which also look attractive.
Okay, so that's take coming in on the hospitality sector. Apart from Indian hotels, there are other stocks to watch out for as well. But what we are watching out for tomorrow are the cues coming in. Of course, overnight, the biggest cue is going to be the Fed meeting and the 25 basis point rate cut.